when we make an investment in a company at Dorm Room Fund and I'm point partner on that company, meaning I'm the one that's going to help the company through until they can raise their next round, I very much look at that as I work for this company now.
Welcome everyone to the Debate Without Debate podcast. It's a new week, which means there's a new episode today. Everyone, I want you all to welcome Justine Humenansky of Dorm Room Fund and a variety of other things. We're really happy to have you here today, and we're excited for this conversation.
Yeah, happy to be here.
So, Justine, before we get into anything, would you be able to give us just a quick introduction for those who don't know you, maybe don't know the Dorm Room Fund, so what you're all about and what you kind of do there?
Yeah, sure. So quick introduction to myself. I started out as a professional ballerina. So I did high school in 3 years, danced professionally for 6, and then went to undergrad. And ever since then have been investing in the tech sector. So I covered public markets at Barclays prior to business school. And then the past 2 years, I switched over to private markets and early stage venture. And I'm managing partner for the San Francisco team of Dorm Room Fund, which is a student-run VC fund that invests in student founders, and we're backed by first-round capital.
Very cool.
Amazing. So it seems like you work a lot with young adults, aspiring entrepreneurs, people who really want to make a lasting impact, but they aren't, quote-unquote, in that grand stage of adulthood. So in your opinion, what makes youth entrepreneurship so special?
Yeah, I mean, I think that student entrepreneurs or young entrepreneurs are much more familiar with the problem of their generation, which is always kind of the up and coming generation, which is really important because soon that generation comes to comprise the biggest spenders in the economy. But if you look at history, a lot of very successful and well-known startups were started in Dorm Room Fund. So anywhere from Facebook to Ethereum were started by young founders in a university setting.
Awesome. Yeah, I totally agree. When I first heard of Dorm Room Fund, I was really drawn to that aspect. My roommate and I, in our own room, would joke that this room's going to be infamous after we leave here because we're going to create something super special. So I love the mission of the Dorm Room Fund. But before we really dive into that, I want to touch on something that you mentioned at the beginning. Switching over from being a ballerina, doing that full time, and then making the switch to going to undergrad and eventually where you are right now. I'm wondering if you could talk a little to that, because I'd imagine that's a little bit of a different trajectory than people would expect.
Yeah, for sure. It's definitely, I think I'm on my third career now. And so I think each one of those transitions kind of involves starting from scratch. But I think the commonality for me is obviously dancing is a very creative pursuit. And I also think that investing in particularly early stage venture is also creative in that it's about hearing people's ideas and their vision for the future. And so that's kind of the commonality that I see between the two.
Absolutely. That's a super interesting point, because I don't think I specifically would have thought of investing as a creative pursuit. I think there's an inclination to think a lot of things are just by the numbers. And that's actually a perfect segue into one of the questions that I really have for you. So I've seen that you write a little bit on the Dorm Room Fund's blog, and you've broken down, why you invested in certain companies. But I'm wondering if you could share with us today as a managing partner, what do you really think makes a pre-seed startup stand out amongst the crowd? Many people have ideas, but what makes that unique edge?
Yeah, for sure. I think one of the most important things that we look for is kind of what does this team or founder understand about this problem or market that nobody else does. And so there's different terms that different funds use to refer to that. So sometimes people call it a unique insight. Other times investors will call it an earned secret, but they really have to understand something that's not obvious to everybody else. And it needs to be a real pain point that resonates with users. So I think that's the first thing. I think the second thing that we look for, especially with student founders that might have or have traditionally had less access to capital, is how has this team or founder been really creative with constrained resources. So that's kind of a combination of like hustle and being really scrappy. But again, it's kind of like I look in particular for that creative element. And then I think it's also, we look for things like, do they run small tests to kind of invalidate or validate their assumptions? And are they open to proving their own hypotheses wrong? And then how do they adapt and navigate around that? And then obviously we look at things like dynamics between the team and how the team works together, and things like if their competencies are complementary or kind of redundant. And then I would say finally, kind of like their ability to convey and get other people excited about their vision. And that's important for their ability to recruit talent to their team, for their ability to fundraise, and for their ability to sell their product or service.
Definitely.
So it seems like the venture capital kind of market is fairly rewarding. Like you mentioned before, a lot of great companies have been able to start and truly flourish just with the impact of, venture capital. But for me, I don't really know much about venture capital, in all honesty. So I'm curious, from your perspective, do you think that there's something, what do you think venture capital could improve upon? Is there something which is missing currently? Because it seems like it's giving people a lot of opportunity.
Yeah, sure. I think you're right in that a lot of times venture capital can be the difference between a startup existing and not existing. So I think it can have a strong impact. I think there are lots of kind of holes or gaps that the industry is getting better at addressing, but still needs to do more work. And so some of those things are like the inclusivity of the industry. And so kind of what is the breakdown of what types of founders get funding and which types have less access to that funding. And then kind of the other side to that is that it's very network based. There's a lot of information asymmetries in the market. And so people tend to kind of talk among their personal networks and recruit from their personal networks. And so that creates, again, dynamics that can be not very inclusive.
Mm-hmm. Definitely. Having been in the room where it happens, what do you think is one aspect that entrepreneurs have an assumption about venture capitalists that might actually not be true? So like what, in other words, what is that kind of unknown factor that you think might create a problem between those two parties?
So I think the best way for me to answer this is to basically say what I think a good venture capitalist is. And I think that that's a venture capitalist that, like, when we make an investment in a company at Dorm Room Fund and I'm point partner on that company, meaning I'm the one that's going to help the company through until they can raise their next round, I very much look at that as I work for this company now. And I'm here to do whatever they need me to do, but they're obviously running the show, but I am kind of on call for them to help in any way that I can. And so I think you want to look for investors generally whose incentives are aligned with your own as a founder and who genuinely want your company to succeed, and that will kind of evangelize your company to anybody and everybody that they talk to.
Mm-hmm. So it seems like we're in some pretty trivial times right now. Quite obviously, our global economy isn't doing too well. People are staying at home. It's questionable if entrepreneurship is still holding to the same value at which it was before the whole coronavirus pandemic. So from your perspective, how do you think the coronavirus is going to impact venture capital?
Yeah, so I guess first I can talk how I think it might affect entrepreneurship, and then I can talk about kind of the funding aspect of that. So I think obviously if we're in a recessionary environment, people's risk tolerance to start companies might be lower, and consumer demand also might be lower for some things. But that being said, I think that a massive global challenge like this there are a lot of things that we need to build solutions for. And so I actually think there's tons of opportunity for people to start companies for things that people really need. And they might have less, let's call it more traditional opportunities like banking or consulting or big tech or wherever they might work if they didn't start their own company. So I think there's probably the short answer is I think there's more opportunities to build really impactful companies, but also probably maybe a little bit lower risk tolerance than normal. I think in terms of funding, the global macro situation definitely impacts access to capital. And so I think what we're telling founders is to try to have a really tactical plan for how they're going to make it through the next 18 months without being reliant on raising a lot of additional capital during that time. Deals will still continue to get done. VCs, if they have closed a fund recently, have capital that they need to deploy. I just think that the bar in terms of metrics and margins will be a lot higher than it previously has, and valuations will also be lower.
Yeah, I think that's a really interesting point. I know I've done much more, listening to a lot more podcasts. They're definitely in this space. And one aspect that I feel like many people don't talk a lot about, and it's something that Joey and I like to focus here on our podcast, is how polarization impacts various different spaces. So I'm curious what your thoughts are, and the impact of maybe polarizing ideas, polarizing startups even, that might only focus on a small segment of the population, whether or not that's a good strategy, especially in terms of speaking to venture capitalists when you're pitching your ideas.
I see. So I think what is a valid strategy that many companies have done is you can start by targeting kind of a niche or core group of users that your product will appeal to initially. I think in order to generally, obviously not always, but in order to reach venture scale, which you can very basically define as like a company that's going to be worth $1 billion one day, you're going to need to appeal either to a small group of very ultra high net worth individuals or a broad base of mainstream consumers. And so I think it's totally valid to target a niche, so long as you can use that as a wedge to then expand into a larger group, unless that niche group is going to be a very high average contract value.
Yeah.
Mm-hmm. It seems like there's kind of like this preconceived notion about venture capital as being like a sleazy and kind of like not very inclusive environment. Mm-hmm. What would you say to people who believe in that idea? What would you say to convince them?
Yeah, I mean, I think I understand where that kind of perception comes from, but I think in venture, what's really true is it's very partner specific. And so every partner at every different fund is kind of very much their personal brand and how they're going to help a founder or not help a founder, and kind of like what terms they want to put in place. And so I think that definitely as a founder, doing your research in terms of what funds are kind of more founder friendly or aligned with your own personal values, and which specific partners you think you would feel comfortable with entering into a 10 plus year relationship, basically. Mm-hmm. So I think it's those two things. I think you can also do some diligence on what past investments they've made. And the best thing is if you can talk to founders that have worked with them in the past, that will help you get some candid feedback on what the experience of a certain investor has or hasn't been. But you can tell a lot by their current portfolio, right? You can see what types of founders they do or don't invest in.
Mm-hmm. So what makes a good partner in a venture capital format?
Yeah, I think it's different depending on the circumstance, but it's a bit what I said earlier, like someone who's really going to go to bat for your company and who's going to feel like they're also working towards your mission, who's going to evangelize your product and team and kind of, send it out to all their friends to try, and to kind of your company will always be top of mind with that person whenever they're talking to other VCs or other founders. And then sometimes it's relevant if that partner has a lot of experience or expertise in whatever vertical you're working in. That kind of domain expertise can be important sometimes, but it's not always required.
Absolutely. I guess a follow-up to that would be, can you speak to a time that you were in one of these settings, and a startup was pitching to you, they might have had an incredible idea, they might have not, that really stands out. Because one aspect that I know Joey and I focus a lot on, and a lot of our listeners speak to, is there's an almost an art to the way that you can communicate. Sure. So what in your mind can someone do to distinguish their pitch, especially if you could speak to an experience that you've had with founders?
Sure. Yeah. I mean, I think ultimately pitching a company is storytelling, right? And so you want to get the investors excited about the story. You want to make sure that it makes sense at every step of the way, and you want to give them a high level overview of what their vision is with enough detail that they feel confident that you can execute on it. And so I think the most effective pitchers kind of draw you in and get you really involved in the story and make you really understand the pain point and how their solution is going to solve that. And then I think like every pitch is followed by a Q&A. And so founders that really know the problem cold and all of their numbers without hesitation, just again, impart the confidence that this founder knows everything about this problem and market and is going to be able to execute. Because having the idea the idea and the team are very important, but the ability to execute is like what actually separates the winners from the not winners.
Yeah, how can you tell what that execution looks like? Because I know I've spoken with so many people who have fantastic ideas. I remember a saying, I think it was from Sarah Blakely, that basically said something along the lines of everyone has $1 billion idea sitting in the back of their head.
Sure.
It just takes the unique person to execute on that. So where can you really find that work ethic before you're even working with them? Mm-hmm.
Yeah, I mean, I think you can usually see indications in someone's background that indicate that their level of execution would be high. And so that I like to look at, like, has that person mastered something before? So were they a top level athlete or a musician? Did they play the violin? Were they we have a partner that was the national spelling bee champion, which I love that. I think that's so cool. So basically just indications that person understands how to get from A to B and how to become the best in the world at something can be you can have those indications before you might have a lot of work experience, for example. And then I think being able to look at how they've approached problem solving so far in terms of the company and in terms of even just the initial validating of the idea. How did they run tests? How did they think about things? If they pivoted, what were the factors that made them do so? I think all of those are pretty strong indicators of how the company will execute on things. Because at the end of the day, the investors provide capital and support, but really they're making a bet that the founder will be able to make the right decisions because they're running the business. It's not the investors that are actually making these calls.
Yeah.
It seems like there's a huge push. I think there's always been this push, but for kids to always go to school, go to college, get your graduate degree, et cetera, go into a nice profession, go to the best school that you can possible. But it seems like the dynamic's shifting a little bit, especially recently with the advent of technology. People are veering away from that traditional path. So to add on to that, do you think that traditional education is a sheer indicator of like a company's success from a founder's background, like from a founder's standpoint?
No, I mean, I think you can see prominent examples of people that didn't go to a quote Ivy League school, or people that dropped out, or people that had totally non-traditional backgrounds. I think talking to some of the gaps and holes we have, I think that some of the networks of some prestigious universities or whatever are very strong and self-enforcing. And so I think that it's probably easier to get your foot in the door, to get a meeting or something if you went to certain schools, but I do not think it's a requirement at all.
Yeah. Just piggybacking on one of Joey's questions as a follow-up, do you think education is cultivating the right type of mindset amongst individuals for these types of relationships, given that it's such a creative process?
Yeah, I think it's that varies a lot by school. I think there are some schools schools that are very focused on entrepreneurship, and a high percentage of the class pursues working at a startup or starting their own company. And then there are schools where it's lower. And I think it's changing over time, for sure. Definitely. I think the percentage of graduating classes that go into more traditional fields like banking or consulting, I think, is lower than it was 10 years ago. And I think that's because people are pursuing more entrepreneurship or working with earlier stage startups more often than they used to.
Yeah, I know I definitely sit in that boat. I've had many conversations with my family alone when I tell them that I'm interested in entrepreneurship. And, you know, they're always concerned. How are you going to make money? Why not go into consulting first or anything else? So I guess as an ending note, do you have any words of wisdom for that person sitting out there right now who has that idea, who's afraid to take the first step?
Yeah, I mean, I think part of the philosophy of Dorm Room Fund is that we actually think starting a company while you're in school can be a real advantage. And that's because you're kind of able to take risks while you're still in school and you're still pursuing a degree. And you'll have various options when you graduate you can continue with entrepreneurship, or you can go a different route. But you also have access to all of your peers who are all very bright and willing to be beta users and take surveys and do all of these kind of things that you need to do initially. And you also have access to professors and academics and industry alum, and you'll get a much higher response rate with the .edu email address than you will just like some Gmail, because people generally want to help students, whereas if you just don't have the .edu email address, they think you probably want something from them. So we at Dorm Room Fund actually think that it can be a big advantage to start a company in universities. And traditionally, it's been a bit harder to raise capital when you are a full-time student, but that's why organizations like Dorm Room Fund and now many other funds also will provide students with funding while they're still in school.
Absolutely. And I think your note is totally on point. I know being in the clubs that I'm on at Georgetown, where I go to school, there's a ton of networks that I could just tap into, which is just so beautiful. But I just want to thank you again for your time, Justine. And I want to roll the red carpet out for you. If people want to contact you in any way, they have questions, or they want to apply for the Dorm Room Fund, where can they reach out?
Yes, absolutely. You can email me at Justine, Justine at Dorm Room Fund. And you can also apply online at our website, dormroomfund.com. And we take applications from founders at all schools within the U.S. and all year round.
Fantastic. Justine, thank you so much for coming on the podcast. That's all from us from the DWD podcast for this week. We will see you when we see you. Peace.
Peace.